Welcome to Markets Now. I'm Michelle Rick along with Brad Kooima with Kooima Kooima Varilek. Well, we're seeing some lower prices over in the grains here ahead of this morning's WASDE report. Over in the livestock cattle futures, to the plus side, hogs are mixed. And Brad, let's talk about this cattle market first off. Wow, more contract highs and all-time highs in the feeders, and we just keep chugging along here in a very bullish fashion, don't we?
Amazing, really. Even for somebody like me who's been as bullish as anybody, I think, I continue to be impressed, and even at the timing of it, I think you pushed me in a corner a couple of weeks ago, and are we going to go to 200? And I said, yeah, I think so, but not yet. And the market coming on here at this time of year, to give you my old guy perspective, okay, well, we used to always have a few cattle around here this time of year, right? We used to make a summer to low. Demand is really poor, right, in August, and we always have enough cattle. And well, that was some summer low we just put in, if that was it, 184. I would be the first to think that there's certainly a lot less cattle by the time you get late in the fourth quarter, and even more tight supply in the first quarter of next year. So yeah, this summertime here without breaking the market really hardly at all has been amazing. It's good for us. Everybody gets a turn, right? So hopefully it's our turn.
So let's talk about the other thing that's amazing about it, and the fact that we've had 4 weeks of lower cash, even last week, just slightly lower. So is that cash trend starting to turn back higher here, or do you think it will this week?
It has in the South. The North has been. I was a little disappointed last week in how what ended up with in the North. Not that it was a wreck. There was an isolated trade or two to a regional as high as 186, but for the most part, we were at 183 to 4, which is a nice market, of course. But I think we had a little bit of a situation here where I know how I feel about these heat stressed cattle, rather. If you had big cattle that went through those 2 rounds of heat, they went off feed. They're really not coming back on feed, and all you have to do is lose a $3,000 animal to heat, and you're going to be wanting to sell them. Okay, so I'm not sure if maybe that was a little bit impactful. I do think, though, that there is a changing a little bit, and I don't want to overstate this and get people to misunderstand, but we've changed the balance of the supply within the regions of cattle a little bit. And what I mean by that is we're going into a little more supply in the North here at those long-fed calves, not a burdensome supply, but a little more than we've had. And conversely, we're coming out of supply in the South. Shoeless this week, very small in Texas and Kansas, and so that's also been part of the deal while we're narrowing the gap between the North and the South. We were $8 premium for a long time. Now it's more like $4, and we may narrow that a little bit more again this week.
Yeah. The other impressive part, we're in the middle of the Goldman roll, and it's not having an impact either, is it?
Amazing. Once we got into this bull market here, probably the last 4 rolls haven't done a thing. In fact, today's the 3rd day of the roll. This is when typically, here we go, we're making new highs. The front month would start to gain on the next month, and with October 4 under the December, I think that's a very real possibility that can happen again.
You bet. And we still have a lot of what I would call bears in the demand camp saying, oh, demand is going to start to falter here. Boy, we haven't seen any evidence of that either, have we?
Well, if you can predict when that's all of a sudden going to stop, then you are a genius. There are people much better at that and smarter than me that you can't tell on demand. I can only report on where we are now, and I still go back to the whole thing that the one positive thing out of COVID is that the millennials, Gen X's, whatever you call them, learn how to cook steak at home, and found out they can do it 2 or 3 times a week for the same cost of going out, and it probably tastes better even. So domestic demand has been tremendous, and for the grind, this hamburger stuff is crazy good demand on that stuff. And the function, how do you measure demand, right? It's different. So at 11 o'clock, they're going to tell us all about supply and demand allegedly on the corn and beans, right? Beef is way different. How much can you sell and how high can you sell it? Because there's a limited ability to store it, right? It's so much different than the corn. So I don't know. You can talk about, demand. And if we have a severe recession, of course, it'll make a difference. But I've been listening to that demand that demand talk for probably about a year. And so far, I haven't seen effect of it.
Yeah. So I'm doing a story this next week on the state of the cattle industry. In, a few lines, what would you say about the state of the cattle industry?
The producer has some leverage right now because the supply is a little bit tighter. The big picture is not there's parts of the state of this industry that are still not healthy, in my opinion. And what I'm talking about is still this imbalance, in my opinion, between the vertically integrated corporate South that has an ability to get rewarded for quantity rather than quality. And I don't see that that's fair. I think this movement toward efficiency is still not healthy. Ask somebody whether they think efficiency in the pork industry has benefited anyone, including the consumer. What have you paid for bacon lately? It doesn't benefit anybody but that person in the middle of that slice. So yeah, we're making some money now. The cow-calf guy's making some money. Good for all of us, right? But to ignore the fact that we need to continue to work at what I think is price discovery, let's not forget that that's still a big deal, in my opinion.
You bet. Well said. Hog market, let's just talk that briefly because we're up in the upper end of the trading range. I got to believe that hogs have been helped out by the rally in the cattle market. But do you think we can get over the hump here, these resistance areas we keep running into?
I have not been very smart in trying to be analyze the hog thing. I've been affected by what we saw for a long time was a huge increase in the supply or the ability to source pigs at a very, very cheap price, which means there's too many of them. And that's the way it looked to me like. So it feels to me like the supply of hogs for the end of the fourth quarter and the beginning of the first quarter is very, very ample. What China's going to do next is unpredictable, but the vibe there is that the exports have not exactly been any runaway. Maybe they're getting back on their feet here with their own hog herd. So yeah, now that we've moved our way to the top side of what's been a trading range really all the way back to the middle of June, I would say we'd probably find some resistance here, particularly in December and February and April hogs. So I'm going to say no, guessing that maybe we don't have quite the gumption to take that out right now.
And grain setting back a little bit here as we go into the WASDE at 11, which you mentioned. What's your thoughts about, how we may come out of this? Because the bulls say we're going to see lower yields, but the bears say doesn't matter because we're going to offset that with lower demand.
Because our demand is poor, especially on the corn. Yeah, that's well said, I think, Michelle. And that's kind of how I feel, how you described it. But then I suppose, they can throw us a big time curveball here at 11 o'clock. One thing I would maybe remind folks of is that this report does merge the FSA data, the planting data, the acreage data. So we maybe get we should get a much more accurate depiction of how many acres we actually ended up planting. There's always that vibe of stuff that got abandoned. What about those wheat acres that we replanted into corn after the wheat failed? So you got all of that going on. I do think, though, that in my opinion, the yield at the end of the day is going to be less than what the last report was guessed at. Whether it takes them until January's report to really get it down to where it is, we shall see. One of the things that I find a bit intriguing as a farmer and an old guy is if they don't take the yield down a ways here, then I am amazed at the genetic improvement that we've made on these crops. If they can handle that kind of weather, that kind of heat, that kind of drought, and still have a somewhat okay yield, that would be truly amazing to me. But we shall see. I worry that the demand bears are winning the battle here right now. Let's hope that $80 crude oil and $5 corn doesn't pick up the demand, at least in that segment of the corn deal. Beans to me have a little harder story, in my opinion, on trying to impress me about the demand there. I don't quite see the relationship on the beans compared to the rest of the grains, whether you're talking corn or wheat.
All right, we'll see what we get at 11 o'clock today. Thanks so much for joining us, Brad Kooima with Kooima Kooima Varilek. That's Markets Now.